read that recently the Bank of England warned that the hedge funds in the city and on Wall Street, they are gambling on UK government bonds through the basis trade, and they're gambling through using the repo market. They're leveraging, so they're borrowing like 100 billion. And they warn if there's a problem geopolitically, economically, that could trigger another crisis. So, and it's strange because it's the Bank of England that provides the repo facility, and they're warning about it. I think it's all got to do with securing natural resources, even Ukraine. And Ukraine, I think, is indirectly trying to bring down the regime, the Putin government, to install a Western puppet that would allow us to basically have all the Russian resources for pennies on the dollar. That's what Ukraine is. Venezuela is the same. And Greenland, I think, will be near the end of the collapse of the current credit system. And then it's going to start being pumped up again from there. I suspect the 1-to-1 will be a lot higher. It could be, let's say, if there's a deflationary collapse, you could have gold at 1,000 and the Dow at 1,000. It's all relative, but I think it's going to be more like 30,000 or something even more. That's how I see it. And silver, to calculate silver, I would just divide the gold price, let's say, by 15, because I think we'll go back to 15-to-1 in the gold-silver ratio.
I'm your host, Farzin Irani. Let's connect the dots. Welcome to Connecting the Dots, where signals speak, patterns reveal, and nothing is random. We aim to cut through the noise to expose what drives money, markets, and mindsets. I'm your host, Farzin Irani, and it's my pleasure to welcome a very special guest today, Mario Innecco, a financial markets and macroeconomics analyst who shares his daily views on his own Innecco 64 YouTube channel. Welcome, Mario. It's a pleasure to have you on the show today.
Oh, thank you. And it's a pleasure to be speaking with you, Farzin.
I've been looking forward to this, Mario, and I've been following your channel as well, your daily insights on what's happening in the markets and stuff. So we most appreciate that. Starting off, for the audience to get to know you in your own words, can you walk us through your background and the path that brought you to where you are today?
Yeah, I mean, I was born and I grew up in Brazil, and experienced a lot of inflation, even though luckily I was on the right side of things, but I saw a lot of wealth inequality, and I always wanted to understand why some people had quite a bit and the majority had none. And and then eventually I started working in the financial sector in Switzerland, late 80s. Came to London in 92, worked as a futures and options broker. And I have a degree in international relations and economics, but I'm the kind of person who likes to study no matter what. I keep looking at things. And back around 2000, 2001, I started looking into the Austrian School of Economics, and I got interested in money. Even though I worked in the city, I didn't know anything about the history and about gold, silver. And and then when I started my channel in 2015, that's what I wanted to focus on, inform the public about the nature, fragile nature of our monetary system and financial system, and why it was so important to have some gold and silver. And that's in a nutshell what I've done. And I guess growing up in Brazil always made me interested about money because of the inflation and the currency collapses that we had there.
It's funny, there was something you said in there as well, kind of a similar journey as mine. Even though you were in the financial industry, you didn't know it exactly the way it is that you understand it now. And as I've said, we've not been taught any of this in school or in our academic institutions. And I think that's for a reason. And some people assume because you're in banking or because I know in your case, you sold bonds and stuff like that as well. And still, there's a bit of opaqueness when it comes to what is really happening behind the scenes, right? So yeah, that was something that thought was worth mentioning to the audience. Now, before we zoom in, Mario, can you give me a big picture view of where is the world truly heading and why do most people miss the signals at key inflection points? And because this podcast is called Connecting the Dots, which dots matter most to connect right now?
Yeah, I guess geopolitically, it's going from Pax Americana that we've had since the end of World War II, into a multipolar world. And yeah, so that's geopolitically, monetarily, and financially, we're going backwards, I think, to pre World War One, where gold and silver were the major monetary reserve assets. And I think what we've had since 1971 has been an aberration, a major reserve currency that is not, yeah, it's not, you can't redeem it for anything. It's like a never ending instrument that you can't go to the bank and get your money, and by money I mean gold and silver. They just give you more debt. So I think those are the most important dots, and they kind of match, or it's no coincidence that the world's changing from Pax Americana to a multipolar world, right when the petrodollar, if you want to call it, system is last legs.
Yeah, yeah, the last legs, right? Do you think what brought this about? Do you think it was the freezing of the Russian assets, which kind of was that event where people went, okay, something's changed, something's dramatically changed now?
I think that definitely was a trigger, but the underlying reason why this system was always going to fail is because it's a debt-based system, and you can only keep kicking the can down the road or rolling the debt for so long. It's just maths. That's all it is. But yeah, the Russian situation helped like trigger it a little bit. Was one of the many triggers, and there are many others, I would say.
Yeah, there's something you mentioned in there, kicking the can down the road as well, right? I was in banking in Australia during the global financial crisis, and I thought this is it. But they managed to kick it down one more time. Then came COVID, and I thought they kicked it as far as they could with governments taking on debt and handing out to citizens. Do you think they're completely out of kicks, or do you think they've got one more rabbit in the hat? Just your opinion on it.
I think they're gonna try again. Yeah, and don't know what's gonna happen, but I think we're seeing already. I think what's happening is that gold and silver are going through the roof because people are realizing that they're never going to stop doing this and kicking or inflating. I also thought back in '08, I was working in the city here in London, and I already had gold and silver. And I thought that was it. That was the end. But they were able to salvage it, and they've kept it going for a long time. But um, I think they're going to go down kicking. They're going to keep that. That's the only thing they know how to do, is to keep trying to kick the can. But I don't think it's going to succeed this time.
Yeah, my opinion on this, Mario, obviously, because I understand. Governments never pay off that debt. I've obviously mentioned on this podcast as well before. I think USA and some other countries are still paying off debt from World Wars II, the Vietnam War, all of that, because all they have to do is keep rolling over the debt as long as there's a willing buyer at the other end. So, based on that conversation, do you want to, because there's a lot happened already. We're early on in 2026, and there's a lot happened already, whether it's the European bond markets or the Japanese bond market, even the gilts, which we saw a couple of years back. Do you want to talk about your view on the government bonds and how it is a big Ponzi scheme? And anything you want to add to that?
Yeah, basically, the government bond market is the flip side of the fiat currency. That's how they uh, issue currency into circulation, not just through the central bank, but it's actually done through the commercial banks. Uh, and the government bond market, yeah, they can keep it going. They can keep it up artificially, like they're doing in Japan. But all that's going to do is, and we're already seeing it, it's going to make big institutions, even central banks, they realize that it's a big Ponzi scheme, and that's why they're buying so much gold. And it's only the public that doesn't realize that, and they don't want them to realize that, I think, because they want to be in charge of the public. So if you have the general public being self-reliant and being invested or having real money, they can't control them. So yeah, you might see, and that's what I thought might happen after the '08 crisis, that they would allow gold and silver to go higher uh, and keep the government bond prices pretty steady and the yields relatively low. Uh, but they were able to actually keep gold and silver down for like 10, 12 years. But now I think, the cat's out of the bag, and I don't think they're gonna be able to. Yeah, they will try as hard as they can, probably more at the, shorter end of the government bond market, like the curve. They will keep, short-term interest rates low that they can control, like, up to a year or 2, but the long-term interest rates, they're gonna creep higher, and they're gonna try, of course, to do yield curve control, but, all that's gonna do, it's gonna make gold and silver and other hard assets go up a lot more in value because people, the smart money and the central banks themselves will realize this is becoming more and more worthless because it's really simple. In the end of the day, you can create these central bank reserves or fiat currency loans by banks really easily and uh, out of thin air. But gold and silver and commodities, you can't do that, and that's why they hold their value ultimately.
Yeah, I want to go down the whole gold and silver later on in the piece in the interview, obviously. So let's try and dissect this, obviously, because I throw a lot of countries and government bonds because all of these countries have issues. Let's unpack what's happening because something's happened in the last week or 2 weeks in Japan as well. So let's unpack one or two, three countries which are important in the whole global macro picture. With Japan, the bond rates, obviously, they were suppressing most of the rates. And as you said, the central bank has been buying most of their government bonds. Corporations have realized that. Some of the audience would have understood in some of the conversations we've had so far on this podcast is inversely correlated. So when countries started facing inflation and interest rates started going up, according to central banks, the bonds lost value, which has also caused problems with some banks failing in America. Now, what is the implications of that in Japan with the carry trade turning around and all of that? Because I've openly mentioned when I'm interviewed and on this podcast, I think Japan is the country that either goes first or someone in Europe, where sovereign crisis is brewing under the surface. So, what's your view on what's happening in Japan right now?
Yeah, I've covered Japan for a long time on my channel in the carry trade. And the carry trade basically was cheap financing by the Japanese system for investors all over the world. And they also made sure that they kept the cost of borrowing really low in Japan. At one point, uh, rates were negative over there, and also they made sure that th- fiscal spending was really high. So that was the crux of the Abenomics, they used to call it, or they call it, and the and it works un, you know until uh, only it works as long as rates and borrowing costs are low, because you're basically selling a currency and borrowing the proceeds very cheaply, and then you're buying like risk assets and other currencies. But when the cost starts going up, like from zero or negative to where we're now, I think the 10-year got up to 2.5%. Up until a few years ago is near zero. Then these people that borrowed in yen, they have to re refinance at a lot higher rate, and they can't afford it because it's all done on leverage and thin margin and thin costs, that they have to close out the other, the long assets that are risky, and that creates a lot of a lot of liquidity problems, a lot of market volatility in other assets, um, and also the yen itself, the value of the yen. It's good for the yen to go down in value when the carry trade is on, because you can pay back in cheaper yen. But the problem is, with rates going up, and the yen has been going down, but very quickly, which is also very negative for the government bond market, and that's why they've had to start raising rates, even though they're reluctant in Japan. So yeah, the carry trade is Japanese yen carry trade is really important, and it's a little bit like one day will be like a snowflake that causes an avalanche, and the avalanche is the whole government bond market in the world, because they're all interlinked. Uh, yeah, there was the sovereign debt crisis in Southern Europe in 2011, 2012. And I think there are a couple of Australian comedians, I think they are, on TV, and they explain how it worked. I forgot their names. Australians probably know them.
Yeah, I know the show you're talking about. Yes, yeah.
Everyone owed each other money, so they had to save these countries, or else so it's the same thing with Japan. Everyone is connected. So that's why it's so important. But yeah, it looks like the Fed now is looking to help the Bank of Japan keep the yen relatively stable. And they'll do that through a swap line, which basically allows Japan to have dollars, so they can get those dollars and buy yen to keep it steady. So, but that's kicking the can down the road. The Japanese yen price of gold, I think during the '08 crisis, was around 60,000. I don't know where it is now. It's at least 650,000, I would say. I'm not sure. It could be even more now. So it's crazy. That's how it's reflected. And they always said, oh, Japan, we need to fight deflation. But now the cost of living is really going up fast there. Recently, the prime minister, uh, she, I think, froze a tax on foods, on some kind of food tax. Yeah, because people are struggling. So, and the reason they used to tell people, oh, we got a deflation problem, is because they had to inflate. But it was all a lie, in the Japanese yen. For the vast majority of Japanese, even though I haven't been to Japan since I was a little boy, they're struggling, I think, as well with affordability, just like everywhere else.
If this conversation resonates, it usually means you're already sensing that the world of money is changing faster than the advice most people are getting. These conversations are really about helping people think more clearly, not predictions, not hype, just understanding how the system actually works. So, if this episode helped connect a few dots for you, Liking the video, subscribing to the channel, or sharing it helps these ideas reach others who are asking the same questions quietly. That's how we grow together, one thoughtful conversation at a time. Thank you. It is. I was actually in Japan last year on a holiday, and I can tell you it was a much cheaper holiday, depending on where the yen's sitting. Obviously, it has depreciated even more. But the crux of the conversation, which you just kind of explained, is what I want part of the audience to also understand. There's no way out. It's a swing. If they try and save the government bonds or the government by reducing interest rates, that takes a hit to the currency, which creates more inflation. And if they don't do that, then the government blows up. So either way, there's no way out. And this is exactly why, again, the prime minister has been in there for a very short time. And I think they're having a snap election again. So because we're democracies and you have to keep the mob happy, if you increase interest rates, the mob isn't happy. But if you don't increase interest rates, the currency depreciates, which creates more inflation, which is again the mob not happy. So most of these Western governments, I think their Ponzi scheme is coming to an end very quickly, and that's why they're also trying to take us to war. We'll cover that just a little bit in the later in the piece, because when you know the outcome, you can clearly see what they're trying to do and why they're trying to take us somewhere. You mentioned the Federal Reserve and swap lines. I know during COVID, I was in New Zealand, and countries like New Zealand and Australia were also given swap lines. Um, where do you think what's happening in the US right now? Because the US was the last, the central bank, the Federal Reserve was the last to start reducing interest rates. And there's this big problem going on between Trump and the Federal Reserve right now. Do you think who wins in that and who might be more right, or what's going on? How are you seeing the dynamics? Because you can explain it away either way, but I want to see your brain analyzing what are you seeing from both points of view.
Well, yesterday, Trump was asked about the dollar, and he said he's not worried about the dollar being weak. So I think Trump is going to win. He's going to get someone at the Fed that's going to cut rates aggressively, because the U.S. needs lower rates, because I think they've got about 8 trillion of government debt coming due this year for refinancing, and I think they're going to do a lot of the refinancing at the shorter end of the curve. And from what I've heard, the guy who's supposed to be appointed Fed chairman, Rick Reeder, he thinks rates should be already at 3, even though it's at 3.75. And he's also a proponent of yield curve control, which basically will punish savers, because they're going to keep inflation relatively high, like 3-4%. By inflation, I mean the CPI, not like the money
The
supply.
lie, the CP lie.
But and then at the same time, they're going to keep very short-term rates like down to 2 or 2.5. So if you put your money in a bank deposit, you're losing your purchasing power. If you try to buy longer term treasuries, you're probably barely going to break even, probably lose as well, if you believe, that the CPI is only 3 or 4. So yeah, I think Trump is going to win against the Fed. Not that I think the Fed, more independent Fed, has done a good job, because they haven't, because they're there to inflate and to keep Wall Street going when they have problems, not mainstream. That's just a cover. So yeah, that's how I see the U.S. I think they're meeting today. I don't think they're expected to cut today. We're talking on the 28th of January, but who knows? Yeah, uh, I think yeah, Trump's going to get his way with the Fed.
Yeah, I think obviously the lower dollar doesn't bother him so much, especially with the tariffs and the trade and all that kind of stuff. At the end of the day, it is still the global reserve currency, and people are going to need it and use it, at least for now. Um, uh, I'm not talking about the gold and the silvers, but if you are living in Mexico or India or Vietnam, you're still using US dollars, or somewhere in Africa. Um, but obviously, you said something about the short end of the curve, yeah, right? The yield curve control. I know Janet Yellen was doing that as well. and I've spoken to a couple of my guests before this. This brings in immense problems when they're funding everything at the short end because they constantly have to roll it over, and then they're beholden to the bondholders or to foreign governments or to, I don't know, wealth funds. And that a quick repricing, if there was a war or something along those lines, or if they just wanted to punish Trump for a certain reason, could have a massive impact on America's financing, don't you think?
Definitely. And if inflation were to pick up as well, let's say they borrowed 2 trillion of let's say 6 months T-bills, and then 6 months later there was a war, and the Strait of Hormuz was blocked, and oil went to $200. That 6 month T-bill would probably be at like 6-7%, and that would and they'd have to roll over at that new rate instead of like 2 or 3. That would be disastrous. There's more risk, yeah, if you do it on the short end. Yeah, you're paying less than a long-term treasury, but then you expose yourself to the risk. And Janet Yellen started that, and before she left, the people that now are in the Trump administration, like Besant, they criticized her and said that's really irresponsible. But they're doing the same thing now.
Exactly, right? It's when the shoe's on the other foot, they don't change anything, it's carrying on. So this is politics. We all know how it all works. And obviously the amount of waste, fraud, and abuse that comes out of government wasting money on certain things that we saw with Doge as well. Did you have any views on Doge at all? I thought it was a clown show for just about 6 months to keep the Trumpians happy.
Yeah, I kind of agree with you. And the other day I saw an X, like a comparison of 2024 government uh, outlays and 2025, which should have been affected by Doge, and the lines look exactly the same. So it's had no impact. It was just a PR exercise.
It was, and I think most Americans also now, even though it's a global reserve currency, they're waking up that this cannot last forever. And as I've had Rick Rule on the show as well, and as he said before as well, the math just doesn't math. So it's just common sense. At some stage, all the governments are going to have to default on their debt, and that's why we're seeing what's happening in the world. Do you want to? Obviously, there was something in there that you mentioned, and my audience will be aware of that. But do you have certain views on who's more to blame? Because my audience understands that central banks create money by buying government bonds, but also the commercial banks create money out of thin air when they kind of give you a mortgage or a loan. And that's about 97% of the credit running in the economy. Do you have any views on, again, you're in London as well, and what's happening with house prices? Do you have views on who's the bigger kind of evil or causing more of the inflation and problems, so to speak?
Well, they're both work together. I mean, the banks and the central banks are one and the same, and the banks do. Uh, most people think that, let's say, Mr. Smith puts $1,000 with the bank, and then the bank lends that $1,000 to Mr. Wilson. It doesn't. Uh, it, the bank just creates the book entry out of thin air. It lends that, um, and the uh, and the commercial banks, they get a lot of their liquidity via the central banks. The central banks create what's called bank reserve money, and they go and buy government bonds from, let's say, Bank A, and then they credit these Bank A with bank reserves, and yeah, and they use that to lend to the consumer. So, I mean, and whenever the banks get into trouble, the central bank is the lender of last resort. That's like the excuse for having a central bank is that we need a lender of last resort. And I think that's wrong because it makes banks more and more irresponsible. I'm not against banks. I'm just against them having like a like a put financed by the public, because that's basically what it is. Because when a problem happens, like in 2008 and 2020, then the central bank, um, they will buy the government debt that the government issues for spending, for trying to solve that problem. They'll do that with money out of thin air or reserves out of thin air. It's the public that pays through inflation and then through taxation, because those government bonds have to be uh, they have to pay the investors a coupon, and they do that through taxation. So it's always the public that uh, backs everything. Yes. So prior to the Bank of England, the monarch risked his or her own like capital if they wanted to go to war or do something. But now it's the general public, and the debt keeps getting bigger and bigger, and taxation gets bigger and bigger, like it's now. And yeah, and there's a few thousand people who do really well. You know, the people, uh, the big corporations and the banks around the central banks. You know, the Black Rocks and everything. And isn't it ironic that, well, it's not ironic, it's just, normal that the guy talking about, running the Fed is from BlackRock.
It's a cartel, right? As obviously with the book about the Federal Reserve, the creature from Jekyll Island clearly says it's a cartel, and the shareholders of the Federal Reserve are the banks themselves.
Yeah, yeah,
But it's
and
called the Federal Reserve.
yeah, it's not federal and doesn't have any reserves apparently, so it's like OPEC as well. OPEC is a cartel, but you never hear people in the media saying that, the BIS and the central banks are a cartel. But when OPEC meets, they always go, they say, "Oh, the oil cartel," you know?
Like, you'll be surprised how much they haven't told us and what is really going on behind the scenes, right? There's something you mentioned in there. You mentioned BlackRock. I don't know if you're aware, but in the last couple of days, BlackRock, there's a fund in BlackRock because in the US, there was a lot of problems going on with private credit already. And one of the BlackRock funds has just kind of lost, I think, about 15 or 16% because it's publicly traded. We could see their numbers. And I think they've just down marked the assets by about 19%. So for the audience's understanding, that's about 20%. They're pretty much saying is a write-off as of right now, straight away already. Any views on that? The private credit cycle coming to, well, I think the whole credit cycle is coming to an end, but the private credit is already starting to show cracks.
Yeah, it has for a while now. I think last year you had some, failures
Yeah.
in the, um, sector. I forgot the names of the companies, and yeah, after the '08 crisis, the regulatory regime made it so that the banks couldn't lend as easily as they used to. So that's why you have private credit now. But a lot of this is very illiquid. It's not traded. A lot of this credit is not traded in a public market. So if investors come and say, "I want my money back," it's sometimes it's really hard for them eh, to get it back. And as with Wall Street and the financial sector, they always like to leverage everything because they're greedy. So that's what happens. But in terms of BlackRock, I guess this fund is a small part of BlackRock, because BlackRock has 14 trillion under management. So, but it could be a signal about private equity. I read recently, and I haven't really looked further into it. I think it was yesterday. They're saying that some private equity, they're gonna like they're gonna sell their own debt to themselves to try to And I thought, What's going on here?" So I think there are troubles out there. I'm not sure how.
There are magic tricks being played everywhere. And that's what they say, where Warren Buffett says, it's not until the tide goes out you realize who is swimming naked. And I think that's coming. In fact, there was something that happened during COVID that when I was interviewed, I mentioned the commercial property market as well. And what I used to say was it was extend and pretend. Most banks have just been extending and pretending that there's no problems there. And you can see some of the big organizations are trying to get their staff back. Commercial property is not in a good space. And I think even residential property now in most countries is starting to suffer because of interest rates. What are you seeing on the ground in the UK at all? Anything, any murmurs you hear on your either coffee visits or pub visits with the average people on the ground? Hi, as you all know, I'm Farzin Irani. After more than 20 years inside banking and finance, what became clear to me is that the biggest financial mistakes aren't product mistakes, they're thinking mistakes. If this conversation resonates, it usually means you're already asking better questions than most people. So if you build wealth, follow the rules, and still feel there's a bigger picture missing, that's exactly the work I do with clients privately. I don't offer generic advice and I don't work with everyone. But if you value clear thinking, a strategic perspective, and calm decision making, you can apply for a private conversation via the link in the show notes below. Thanks for watching.
Yeah, I mean, I've been warning about the debt situation here for years, that it was going to be a problem. And we had that Liz Truss crisis back in 2022. Uh, she tried something different. The markets punished her. But the other thing about the UK is, yeah, it doesn't matter what party is in power. They seem to like want to keep the tax intake really high, mainly because of the debt. And the whole trigger was '08 because they had to bail out a lot of the city of London. They had to bail out um, bankers. And I read that recently the Bank of England warned that the hedge funds in the city and on Wall Street, they are gambling on UK government bonds through the basis trade, and they're gambling through using the repo market. They're leveraging, so they're borrowing like 100 billion. And they warn if there's a problem geopolitically, economically, that could trigger another crisis. So and and it's strange because it's the Bank of England that provides the repo facility, and they're warning about it. It's just
It's a clown show. It's a clown show. You mentioned during the Liz Truss administration as well. I've had another guest from the UK as well, and we had this conversation where the Bank of England, even when they provided liquidity to the government during COVID, and when they started increasing interest rates and the bonds lost value, I think the Bank of England, and I mentioned this because I know the New Zealand Central Bank, the Reserve Bank of New Zealand, has done the same thing. They hold the government responsible for their losses. And I've seen it on the Reserve Bank of New Zealand's balance sheet. And I think the Bank of England has done the exact same thing, right?
oh yeah, it was I think Chancellor Osborne who did the deal, and yeah, taxpayers been paying tens of billions back to the Bank of England because they've suffered losses from buying gilts. So even the bankers, they always get bailed out, even the central banks. And
Always. And this is where, sorry, Maria, I didn't mean to interrupt, but this is what I mean to say is they're always privatizing the profits and socializing the losses. But this is why people like you and I are having this conversation because the average person doesn't even know this is happening. They don't understand it, that they're always on the hook for the money that the central banks create out of thin air. When they profit, it's okay. But when they make a loss, it's always the taxpayer that has to pay for it. Sorry, carry on.
yeah, and in terms of what's happening here in the UK, yeah, the people at the top are doing well. The traders, the bankers, the hedge fund managers, private equity, but the bottom 80, 90%, they're struggling because all this stuff we spoken about, all these bailouts, these artificial rates and, money printing, that reflects itself in a weaker currency, and when you have a weaker currency, everything gets, it's you have the affordability crisis, right? So that's why, people are struggling in the UK, but it's not just here, right? It's even in the US.
everywhere.
Yeah.
It's everywhere. In fact, you mentioned bailout, and I've heard you on your channel as well. You've got similar views like me about the book The Great Taking. I've had a read. There's Bailout, which they had, and during the G20 summit in Brisbane, which I know was in 2013, they did the bail-in legislation, and most people don't even know that's in place for your bank deposits. Do you want to talk around just that piece, that now the bail-in and the Great Taking, and what do you think could happen there?
Yeah, bail-in, I guess, it's, instead of, asking the taxpayer to bail out the banks, you, take the money from the depositors, to bail out the bank, and, you give them shares in the bank that almost just went under. So they did that in Cyprus, I think 2013. So, yeah, the next time it could be a bail-in, and, in terms of the Great Taking, yeah, it's a good book. I think I covered it here in 2022 when it came out. Um, basically, it's similar to a bail-in, but it's done not with your cash, but with your invest like stocks and bonds. Yeah, and they will use that to collateralize the banks once the system implodes. And a lot of people, and that's one of the reasons why people, some people get uh, share certificates sent to them by their broker, which sometimes is really difficult because everything is electronic nowadays. So, yeah, the great taking is a risk out there. I don't think it's a certainty. I think the only way they will be able to avoid a great taking is if they hyperinflate the system and just keep it going, and then, yeah, the money will be worthless, but you still have title to companies that produce real things. I think the guy who wrote The Great Taking said that this would happen in a deflationary collapse, not a hyperinflationary collapse.
Okay, so you've gone there. Let's continue with that conversation. It was a perfect segue. I have views on a short-term deflation with the hyperinflation and then the big collapse, like the massive deflation, right? What are your views? Because I've heard you and a couple of guests discuss this. Every macroeconomic analyst sees it slightly differently, and obviously depends on the time frames. What is your view? The floor is all yours.
Yeah, I mean, I'm starting to think they're both happening together. What does that mean? Well, if you measure everything, if you measure value in gold, we're having a deflation. I mean, the Dow gold ratio was 46 almost in 1999. Now it's below 10. So that means that the Dow has dropped from 46 to 10 in terms of the ounce of gold. And there are a lot of other things that are going down in value. So if you hold gold, yeah, it's everything's deflating. The money supply is deflating, everything. But in terms of fiat, you're getting everything becoming worth less. I mean, the Dow now is worth almost 50,000. Back in 1999, it was just around 11,000. Um, and I think yeah, I think there's a big, people are blind to this because they've never been taught, like you said earlier, in school, they don't teach people about gold, money, and like fiat currency and all these things. So they don't, they can't seem to think it's relevant to price things in gold because they don't understand it. So, like this year here in the UK, everyone's excited because the FTSE is above 10,000, but it was only at 7,000. It was 7,000 back in 2000. So in real terms, in terms of gold, it's not doing well. So, yeah, that's how I see it. I think, you will get, yeah, you will get like a hyperinflation in terms of fiat currency, and you get deflation in terms of gold. That's why I think both will happen.
If this conversation resonates, it usually means you're already sensing that the world of money is changing faster than the advice most people are getting. These conversations are really about helping people think more clearly, not predictions, not hype, just understanding how the system actually works. So, this episode helped connect a few dots for you. Liking the video, subscribing to the channel, or sharing it helps these ideas reach others who are asking the same questions quietly. That's how we grow together, one thoughtful conversation at a time. Thank you.
Even if you get, uh, in terms of fiat currency, even if you do get a collapse, if the central banks and governments really stop being profligate, uh, the collapse will be so bad that companies, governments, individuals, they will all go bankrupt. And so even if that were to happen, you want to have gold and silver or hard assets because they have no counterparty risk. So ultimately, yeah, hyperinflation or even the deflationary collapse will be positive for gold and silver.
Yeah, yeah. Now, very valid points. And as I've mentioned before as well, it's the denominator, right? As you just mentioned in there, if fiat currency, which is dollar paper, just created out of thin air with 50 or 100 written on it with the queen, or whether the central bank is different or the color is different. But the other point, which a good point you made as well, you mentioned obviously the FTSE, but after people, if you're in Venezuela and you look at their stock market, it literally vertical, but that's only because the currency is literally rubbish. It doesn't mean anything. So if you're going to measure it in that, then it doesn't make sense. Whereas if you held gold or silver in countries like Venezuela, Brazil, Argentina, or even Turkey, you would have handsomely profited from it because your base currency, your denominator, is real money. So let's go there because actually let's just stay away a little bit because I just want to cover geopolitics and war before we go there, because that is also related to materials and resources. What's your view on what's happening maybe in the Ukraine and now Greenland and Venezuela? Do you think it's more to do with just geopolitics or it's to do with natural resources? Because a lot of countries are talking about strategic assets.
I think it's all got to do with securing natural resources, even Ukraine. And it's Ukraine, I think, is indirectly trying to bring down the regime, the Putin government, to install a Western puppet that would allow us to basically have all the Russian resources for pennies on the dollar. That's what Ukraine is. Venezuela is the same. And Greenland, yeah, Greenland, not Iceland. Greenland is the same. Um, yeah, Greenland has a lot of natural resources. Yes, there's a lot of ice there, but around the edges, I think, by the coast, it's very accessible. Uh, yeah, so yeah, it's all about the natural resources. Maybe some strategic reasons for Greenland because the Arctic is quite strategic. Russia has a big, ec- you know, presence there, and the U.S. has some presence with Alaska, but it's mostly Canada up there. So, yeah, and even Canada, Trump is talked about bringing in Canada to the United States. They have a lot of resources, and yeah, they would fit right in with Greenland as well.
Yeah. He first started with Canada. Obviously, that was so obvious. Then the whole Venezuela and the Iran thing as well. And now the Greenland. So obviously, it's to do with natural resources because it is the BRICS countries at one end. And I think India is still trying to figure out which end they're going to go. But Russia, China, Iran, and North Korea, I think from a war perspective, are at one end with some of the West at the other end. And I think what Trump is also trying to do is if he can avoid US being part of NATO, if there was a false flag, because I've openly said when I get interviewed, I think NATO is trying for a false flag because if the system collapses on their watch with the politicians that we have, in your case, Keir Starmer, or France and Germany and all of that kind of stuff, then people will realize the whole monetary system was a Ponzi. But if you have an external enemy with a war, that's an easier blame. So talking about the war, and again, I know you're up for time as well. Let's talk gold, silver, precious metals, all of that stuff, because I know you have a passion for it. What is your view? Obviously, it's already gone up quite a lot. What is your view on where are we in the cycle? And yeah, just take it from here.
Yeah, I think we still have a few years left in the bull market in precious metals. And of course, it's a bear market in fiat currencies, and I don't see the fiat currencies doing well. So even though we're going to see well, we have seen, and we're going to continue to see volatility in gold and silver and commodities, I think it's a different bull market now. It's not like 1980 or 2011. um, I think we're going to stay at elevated levels because gold and silver are going to become part of the world's monetary system, and they're going to need to allow gold and silver to stay high to provide liquidity for the new system, because that's the other reason why they're going for the resources, is because our monetary system is failing. And they want to try, it's almost like the great taking, right? But it's on a global scale. They're trying to take people's resources to collateralize their currencies. So and that's why I'm bullish gold and silver. In terms of targets, I don't, prices are always difficult, but ratios are prices as well. But, if you look at the Dow Gold ratio going back to the 1920s, like I think 32, 33, it bottomed at 2 to 1. 1980, it bottomed at 1 to 1. And right now we're just below 10 after having been like in the 40s in 1999. So I think that by the time we get to around 1 to 1 versus the Dow, and it's difficult to say at what price that will be 1 to 1. I think we'll be near the end of the collapse of the current credit system, and then it's going to start being pumped up again from there. Yeah, I suspect the 1 to 1 will be a lot higher. It could be, let's say, if there's a deflationary collapse, you could have gold at 1,000 and the Dow at 1,000. It's all relative, but I think it's going to be more like 30,000 or something even more. That's how I see it. And silver, to calculate silver, I would just divide the gold price, let's say, by 15, because I think we'll go back to 15 to 1 in the gold silver ratio.
It's already made quite a jump because during COVID, it went just after that over 100, the ratio. But it's come down closer to the 50 mark, I think. And some people say when it's around 40 or 30, maybe if you're heavy on silver, start turning that into gold. But talking about the ratios as well, do you think because of what we're talking about, of course, the gold could be at 20 and Dow could be at 20. Who knows on which one plays out? Again, what the denominator is. Um, but where do you think there is any chance of gold being, I wouldn't say confiscated again, but maybe taxed this time because some stupid brain dead governments are also taxing unrealized capital gains? Your view on that? Is that possible? Maybe the tax it this time?
It's possible the tax here in the UK, coins of the realm, which are sovereigns and Britannias, their capital gains tax exempt, but I guess they'd need an act of parliament to change that. In terms of confiscation, I don't really see it because uh, very few people have gold and silver. It's not like in the 30s where it was part of the system. And one way to confiscate is for them to print loads of money to buy the gold, drive the price higher, and force people to get out of their gold by luring them with, this crappy fiat currency. That's why I tell people, try to hold on to your gold and silver as much as possible. Yes, sometimes you need to get back into fiat, but only to exchange that fiat for something that you really need or something you want to invest in. Yeah, don't get out of gold to just hold fiat. And they're going to try that, and that's basically a de facto, if you want to call it, confiscation. But I don't think they're going to be knocking on your door and asking you for your gold or silver.
No, I think that is why, yeah, it's a backdoor confiscation where they could pass an executive order and say everyone's got to hand it in again at this price. And we've seen something like that happen in the early 1900s in the US as well. With an executive order, people handed it in at $20.67, I think it was, and then it was repriced at 35. So your currency was pretty much devalued overnight. So governments have tricks up their sleeve. Um, I've actually heard some people going towards silver more so because they thought, okay, silver hasn't been confiscated, less aware, central banks haven't taken it. But now silver's become a strategic asset. And do you want to talk about maybe China's also, as of January, banned exports of silver? And I know India's buying a lot. What are your views on which is a better asset maybe to hold if you only had a choice of one of these? Or buy now?
Yeah, I mean, China, they put export controls. They haven't banned it completely, but it's going to be much harder to export silver out of China. In terms of if I had to choose one, probably gold. Even though I like silver too, and even though I think silver will outperform, but some people think that silver might go to parity versus gold, but I don't think that will happen. In the last 2,500 years, it's always been like at the least the gold silver ratio has been 10 or 12 in ancient Rome. And in the last 500, 600 years, I think 15 to 1. So, yeah, gold is a little easier it's more portable wealth. Silver is more day to day money for smaller commercial transactions.
Barter. Yeah. Yeah. And I think also obviously the central banks hold gold. So they don't need to monetize the silver. Obviously, it is the poor man's gold, as they call it. And I call silver widowmaker if you don't know exactly what you're doing and why, because it's so volatile. So you need to understand why you're buying silver rather than just saying, oh, because it's cheap, I'll buy it. But sometimes that's all people can afford, right? The average person can afford.
Yeah,
So
yeah. Even the central banks now, they're starting to buy silver because the higher the price of silver goes, the more interesting it becomes for them to hold it because why hold reserves of silver? It's only $20 an ounce, very bulky. But if it's at 500 or $1,000, uh, I think silver will become more important as a monetary asset as well, and not just a strategic mineral for industry and defense.
I've got a fun fact for you, Maria. I don't know if you know, but I brought it to Rick Rue's attention. Do you know the Reserve Bank of India, the RBI, last year passed some legislation saying people could now go to a bank, hand in their silver. So this is a backdoor again for the government to somehow get hands on some kind of silver. But the average citizen can take a loan. I don't remember the exact percentage right now. Again, I think it was 60, 70% against it, but against their silver as collateral. The first country who's trying to collateralize silver for consumer loans. You have views at all? Anything on that?
Yeah, I'm aware of that. I've spoken about that. They're going to start from April this year.
Yeah, yeah, yeah. And it's funny because China actually is telling their citizens to buy more gold. India, obviously, most of the citizens know what inflation is, hyperinflation is, and they don't trust their governments anyways. So they hold wealth in gold. But now it's the silver because it's a strategic asset. Hey, you have any view on the silver failure to deliver? Because there's a lot happening with JP Morgan behind the scenes right now. I've actually seen something in the last couple of days where they've increased margins on certain contracts and all of that kind of stuff. Do you think they're playing tricks because they think the market could break or?
I think there's definitely a shortage of physical silver out there. Whether it's JP Morgan or Citibank or UBS, there's been a lot of speculation. I don't know, but even in China, the silver reserves on their exchanges is at the lowest level since 2016. So yeah, I think that's what's driving the silver price higher. But the bullion banks, like JP Morgan, they're going to try to keep suppressing that price. But I think they're fighting a losing battle because more and more people in the countries and uh, industry, they need physical silver. They don't they don't just want a paper promise. So yeah, that's how I see it.
Yeah, and let's say, for example, we're talking gold and silver. What is your view on, would you also invest in mining shares for the higher upside, or how do you hold those two conflicting views in your head? Or because of geopolitics, obviously, I'm asking because mining was a good bet, but now,
I think mining is still gold and silver miners are still undervalued versus the bullion. And yes, they're very risky. So I would say if you have $100, I would put 90 in gold and silver physical and 10% in the miners. So if the miners lose 50%, yeah, it's a big loss, but it's only 5% of what you have. But if the miners do as well as I think they will, that 10% could become 50% of what you have. So that's the way to look at the miners, I think. And yeah, it's very different from owning physical gold and silver because there are political risks. There are risks, the cost of mining could go up as well. There are managerial risks. There's a lot of other risks. While holding a coin or a bar, the only risk is that you need to keep it safe.
yeah. And there's, as you said, there's higher upside, but there's higher risk as well because there's so many factors. And as today's geopolitical world, countries could even nationalize mines if they wanted to. I know there's happened in Burkina Faso, and some African countries are looking at certain things. Hey, anything else you kind of want to cover before the audience gets to know you on a personal level? Anything that I might have not covered from a macroeconomic or geopolitical factor?
No, I mean, I think we covered um, a lot of bases. I can't think of anything else.
Okay, thanks. Mario, just for the audience to get to know you, ask a few questions. What books would you recommend to your friends or family members most often?
Yeah, in terms of economics and markets, I recommend Fiat Money, Inflation in France. It's not a big book, but it's really interesting by Andrew Dixon White. And it's about, yeah, history, inflation. And the other one that I think is a must is what has government done to our money by Murray Rothbard, because it teaches you, it uses the regression theorem analysis of money so you can understand what money is. And I think and anyone can read that book. You don't have to have a PhD in economics. So those are the 2.
Yeah, thanks for that. I actually have that one, the second one, because on my website I have a list of books that I recommend people to read. But I always ask the audience as well, and I put it in the show notes for our audience. They can click on a link and read a book that the guest recommends. Hey, do you have a motto in life?
A motto.
Yeah.
I guess I like the Austrian School of Economics, Mises Institute motto. And I'll read it for you. I think, oh yeah, Tuna sed in malis sed contra audentior ito. Yeah, always, yeah, forge ahead against evil. That's what it means in Latin.
Wow.
So
That's kind of the motto you lead life with.
yeah, yeah, that's what I try. Stick to the truth and what's right. Yeah.
Yeah, fair enough. Hey, best advice you have received from someone?
Yeah, my dad, he's given me a lot of advice, but the best present he gave me was on my 18th birthday. He didn't give me a new car or anything. He gave me a poem, "If" by Rudyard Kipling, and yeah, I think that was a good poem to give, as a present, and it's helped me.
There you go. There you go. A poem, right? And this is the impact, right? That something as simple as that can have in someone's life. Hey, one last question. What strategies do you recommend for building long-term wealth, just from a big picture view?
Be obsessed with something and learn everything about it. Uh, Persevere and have patience. I mean, patience is really important.
It is a virtue in the world of instant gratification in today's world. Last question for you, Mario, because I have a financial consultancy called Success Simplified. So I ask every guest this who comes for the first time on the show, how do you define success?
How do I define success? Well, being not beholden to anyone, like, and being independent and being your own boss, I guess. I think that's success.
Absolutely. Absolutely. Living life on your own terms. As I said, is there anything else at all? And where can people find you?
Well, they can find me on YouTube at Monaco64. I'm also on X at Monaco 1964.
Okay. And obviously we're connected on LinkedIn as well. I'll get the links to any of your channels and stuff that I can put on there. Hey, Maria, I cannot thank you enough for your time because I know you're busy with your own channel and you pretty much post every single day and you have a big following. So thank you so much again for your time. I really, really appreciate it.
You're welcome, and I enjoyed speaking with you. Thank you.
Thank you. It's been my pleasure. If this conversation added value, like, subscribe, and share it with someone who needs clarity in a noisy world. Your support helps grow this community and keeps these ideas moving forward. Stay curious, my friends, and keep connecting the dots. Thank you.